In this video, I will tell you about embedded finance and what is embedded finance. So let's start. The coronavirus crisis prompted businesses to rethink their digitalization strategies and move forward between 2020 and 2021. Many digitization projects that were planned years in advance were completed in a matter of months. These changes will continue into 2021. The fintech industry is a prime example of digitization. It's characterized by traditional businesses integrating financial systems into their business plans. The era of embedded finance is taking hold, and with an estimated market value of over $138 billion in 2026, it's clear that it's not just a financial fad, it's the future. Definition of embedded finance. It can be difficult to grasp the concept of embedded finance, as with all new concepts. Embedded finance simply means that a provider of non-financial services can use financial tools and services, such as payment processing or lending, to provide financial tools. An example of embedded finance is an insurance policy that covers goods purchased in store by an electrical shop. Embedded financing is designed to simplify financial processes and make it easier for consumers to get the services they need when they need them. In the past, consumers would have to visit a bank branch in order to obtain credit to make substantial purchases. With embedded finance, consumers can now make a purchase and apply for credit at the same time. This is called the point of service. EMI loans from Amazon, Klarna, and Afterpay are some of the most popular examples of embedded financing. One of the main benefits of embedded finance for consumers is its simplicity of use. Customers may feel more satisfied with their purchase and less likely to need to look elsewhere for credit. This is a key factor in building brand loyalty. This can increase the profit potential for businesses as customers are more likely to buy an item or service again and again. Embedded financing is not just about convenience. It can also be used to better understand consumers' spending habits and needs. These data can be used later to help drive business development. Embedded finance, the best uses. How can financial tools be integrated into your business? Let's take a look at 5 of the most common uses for embedded finance. Pay later, buy now. Modern shoppers have a new way to get credit with buy now, pay later programs. Consumers can shop differently by having access to more products that can be paid over time. This includes buying a better quality piece of home technology or a baby travel system. Trading and investments. Embedded finance tools allow users to connect to their brick-and-mortar bank to make investments that are in line with their financial and spending habits. This is an example for embedded finance by another financial service provider. Point-of-service lending. Integrated lending, which is a variation of BNPL, takes loans to the next level. Businesses can embed these financial tools in order to finance bigger or more important purchases. They often need additional information such as creditworthiness to be able to lend responsibly. Fintech as a service. From invoicing to customer acquisition and everything in between, financial technology as a service tools as a whole are increasingly being added to company offerings. Integrated insurance services. Customers may want to make sure that their money is not wasted when purchasing a new product. This is where integrated insurance comes into play. Businesses are better positioned to provide insurance quickly by integrating insurance financing tools. Engaging embedded financial in a meaningful way. Start by creating an embedded finance strategy for your company that meets all of your needs. This requires you to analyze your digital needs and decide which tools you want embedded. First, identify the goals of your company for embedded finance. These could include improving customer service, expanding customer base, or starting a new venture that meets a specific audience or needs. An embedded payment is one way to improve customer satisfaction and service. A BNPL model might make certain goods and services more accessible to some customers. Embedded insurance may make it easier to be a one-stop shop. To find the best solution for you, it is important to first understand your needs. Understanding the role of your company in the ecosystem is another challenge. Service providers, for example, provide access to the technology stack while license holders, e.g., banks and e-money institutions, help with regulatory coverage by controlling the infrastructure and carrying out financial transactions. There are many ways to integrate finance and banking programs into services and products that are not financial. First, you can invest in an additional offering on the brand's online platform. This could include providing lending services to businesses or opening embedded bank accounts. As a connector between financial service providers and non-financial business, the second option is to join embedded finance. This could look like a data transfer network that is used by financial product providers. You can also collaborate with companies that are focused on integrating the financial infrastructure into their product or service and be a part of that ecosystem. Embedded finance is growing at the same rate as platform ecosystems. This is due to the growing demand for financial services that are convenient and increasing numbers of online transactions. There are some best money-making offers given in the description below, so don't forget to check them. If you liked the video, then like and share it and give your opinion through a comment. If you haven't subscribed to this channel yet, then do it now and also press the bell icon so that you can get notifications of my future videos. Thanks for watching.